A transaction is an interaction that occurs between two institutional units by mutual agreement or through the operation of the law, and it involves an exchange of value or a transfer. Mutual agreement means that there was prior knowledge and consent by the units involved. For example, the export of a car by a resident in country A and the payment by a resident in country B in exchange for the purchase of the car. On the other hand, some transactions are imposed by force of law and are therefore compulsory. Let's take the case of a cross-border worker, resident in country A, who crosses the border daily to work in country B. The cross-border worker earns income in country B, then pays taxes to the government of country B. The payment of the income is by mutual agreement between the employer and employee, while the payment of the tax is by force of law. Transactions are classified into monetary and non-monetary. Monetary transactions happen when there is a payment involved between the two units, or when an asset is acquired by a unit. Non-monetary transactions include, for example, the exchange of goods or services for other goods or services without using money. For example, barter, rice for oil, or the provision of foreign aid goods as a transfer in kind. Both monetary and non-monetary transactions can be either an exchange or a transfer. An exchange is a transaction of something for something. For example, the barter transaction. While a transaction is considered a transfer when an economic value is exchanged without receiving the same economic value in return. For example, the provision of foreign aid with no quid pro quo. Transactions recorded in the international accounts are between two institutional units in two separate countries, one a resident of the compiling economy and the other a non-resident. For each cross-border transaction, there are two entries in a country's balance of payments, a credit entry and a debit entry. This means that for each transaction, there are two flows and two accounting entries for each party. That's why double entry bookkeeping is important in international accounts.